right, guys, here's Doc's Market Minute for Wednesday, December 23rd. I'm looking at the S&P 500, and what I've been noticing lately is that we are on the verge of determining whether or not we are going to have this chart break to the upside or fall to the downside again. I think we've got a lot of energy here, as we're seeing on the monthly chart. A lot of it coiled up over the last year or so, really essentially going nowhere. And right now we're looking at the prices just poking above the January 2nd, which is the first trading day of this year. It's just poking above January 2nd and going slightly positive for the year by 5 points. So you can see that we've had a very, very flat year. And what this does is coils up a lot of energy, and typically will run for, I mean, we're staring at about a 500-point move here. So it's very important that we identify which way this is going to go once it finally starts moving. So because of all this potential energy wound up in the charts, sometimes playing a standard non-directional trade like an iron condor or time spread can be a little tricky. So what I like to do in this case is to give it a little bit of bias. Right now we still have to give the upside bias the benefit of the doubt. Unless we see a lower high setting up here, this is more of a bull flag, and we should expect to see the price pop out the upside. If it doesn't, the price action will let us know. What we're also seeing is the golden cross happening again on the 50 and the 200. And every time over the last 20 years, we've seen the death cross fail to generate any further downside, and it crosses again to the upside. We see a significant move to the upside. So it's not that I have an upside bias, but I would have to give the benefit of the doubt right now to the overall uptrend, which is still in place. And because of this, what I've set up for the February cycle is a modified iron condor here. It's a modified iron condor where we're only trading about a fifth as many call spreads as put spreads. And to compensate for the number of put spreads that we were adding here, we've added a debit spread at the money, a put debit spread at the money, to add a Vega hedge to this. So as the price, if it starts to move to the downside and implied volatility goes up, we've got a hedge position that's going to somewhat help that. Not 100%, but it should flatten out this curve from getting too low. So that's one way to handle this. And looking at the price action for today, where we're up about 22 handles, it's probably the right call for this type of market condition right now. So we'll stay in touch as this trade goes on for the next few weeks and let you know what we run into as the price runs into obstacles or reverses or starts to trend again. We'll let you know. Thanks for listening, folks. Have a great holiday, and we'll see you back here next week.